the Tuesday morning market wrap. It's the 10th of November. I'm a little bit later than normal, 9:25. I'm a lot later than normal, I'm sorry. Been flat out since 3:30 this morning doing stuff, lots of different things, very exciting. Starting with Axie, trying to get the CMS right, doing my Business Insider stuff. Spent a lot of time this morning writing what I think is a pretty good article on the OECD last night, saying that China and emerging market slowdown in global trade is a real issue for global growth. We know that. But also talking about the leverage impact in emerging markets. So keep an eye on that. Obviously, last night we had a down night on stocks. The Dow was down about 1%, as was the Nasdaq and the S&P. London was down a little under 1%. ASX futures were down about 1% after a shocking day yesterday, 1.83%. They're resting right on really important support, and we'll have a look at that in a sec. The DAX in Europe was down about 1.6, the CAC down about 1.5. Strangely, against that backdrop of, risk aversion, which I think was driven by concerns about the Fed, and Boston Fed President Eric Rosengren doubled down. He's a dove. And he doubled down and showed he's not going to fight the Hawks, and he pretty much guaranteed that there's going to be a rate hike in December. That said, it wasn't just that weighed on stocks. It was also the weak Chinese data that came through and the impact that it had on the market and expectations overnight. We talked about the weak Chinese data yesterday. You add in a bit of the OECD concerns about China, and you really get a sense that, as I've been saying pretty much since I started this vodcast, my daily videos, valuations are stretched up here. We got up above 2100, but now the S&P is back at 2078, just on support. We'll have a look at that. Foreign exchange. Foreign exchange had some work to do in terms of oversoldness. A new word I'm using now, oversoldness or overboughtness. So most currencies were oversold against the US dollar, which meant that they and the US dollar needed to work off that either oversoldness in the terms of the euro and the Aussie and sterling and yen. And overboughtness in terms of the US dollar. And we've seen that. Another reason why euro managed to hold in firm last night, even though that Reuters ran a story that 4 anonymous members of the governing council are pushing towards a deeper move into negative rates for the euro, is that because of the status of Europe as a capital exporter these days, at times of trouble, like Japan and the yen, the euro tends to go bid lately as issues arise in global markets, and that's put it a bit tone under the euro. It was also outside the bottom of the Bollinger Bands, which we talked about yesterday. That's normally a good sign that we're going to get some sort of flattening or recovery before the next leg down, which we'll see. Overnight, interesting, crude slipped below $44 at one stage. There's a bit of an in OPEC, out of OPEC punch-up going on. The Saudis effectively said we're going to pump, but the Omanis are basically saying the Saudis are screwing up the whole market for everybody. So Saudis don't care though; they're just going to keep going. It managed to recover its 44.11 after being down under 44. Overall, commodity prices fell last night, but iron ore managed to climb a few pips. Copper's at 223. Interestingly, watch the bond market, folks. Interestingly, Aussie 10 years went through the roof last night. US 10's 235. Now, you might have thought stocks coming off US bonds might rally. No. The US bond sold off again up to 2.35. The US 2s, basically 0.89, same level as where they closed on Friday. But that's interesting too. So you can see this divergence that's starting. It's one day, it's 2 days, it's a week. That could start to emerge as an issue for markets, and that is US interest rates rising at the same time putting pressure on stocks when emerging markets aren't ready to handle it. So I'll have to see how that plays out. Anyway, it's going to be a fun day today. It's a big one. Here in Australia, probably right now, we've got ANZ consumer confidence, which I haven't seen yet, and what it's going to say. It's out at 9:30. Then, of course, we've got Chinese CPI and PPI at about 12:30 today. We've got some other data in Australia, including the NAB business survey, which I think is the single most data in Australia. After we get through China, it's reasonably quiet, nothing too special in Europe or the US. So China's a big one at 12:30, but I'll be watching the NAB business survey. Let's have a look at the charts, and then we'll move on for the day. Looking first at the Aussie, because that's the chart that jumps out at me. Below the Bollinger Band, we had a bit of a rally. We're still in a downtrend. I think support is going to be the 69.50 to 70 cent region. So that's the key level I'm going to be watching in the period ahead. And you can see that is, down here towards the bottom of that trend line. So still in a downtrend, but close to the bottom of the range than the top. If we have a look at the SPY 200 as it is in AXI terms, we can draw a nice little trend line here, and you can see, crash bang, we're right on it. This is key. Okay, so we broke support, right? Broke support yesterday in the sort of the 2010 region, and now we've run down to 50.60. I did a chart of the day over at AXI yesterday, and you can see that this is the level it's supposed to hold up at. It's a Fibonacci. It's the 50%, I think. Anyway, so what I've got is then if that breaks, then you've got the September lows at a minimum and August lows after that, if possible. So keep an eye out for that. If the Aussie falls, if the ASX falls another 10 or so points, it could get very ugly. If we look at West Texas Intermediate, you can see there that the market is. Sorry, just someone's asking for some help. You can see we're back towards the support zone, and you'd expect that. You would expect that it's going to be find some level of support here at sort of at the September lows. So these September lows. It's really just in a big old box, but keep an eye on that one. If that breaks down, you could probably draw a trend line. If I pick this trend line up, you could probably draw that trend line to there now, and you can see that that's the level that traders are going to be watching again. So if that breaks down there, that's 43.40. You've got to move to 42.50, and below that, you're in the $40 region. No reason why oil should really sustainably not fall. S&P, we got down to below, I should say, my fast moving average. It's still above the 200-day moving average, believe it or not. But as I've been saying for the last week, this is a topping pattern. I'm looking for it to dip back. I said I thought it was going to drop to last week to back to here, this sort of 260 region. We got close enough last night. I think it's going to go lower based on the way that I trade in my system. And so we'll wait and see how that goes. They're probably the key levels to watch. In terms of the DAX, which I'm not sure if I've got, there's the DAX. So we've had the DAX pull back from important resistances as well. So we could be in for a turn in global market. Watch the Australian data today. Watch the Chinese data at 12:30. Anyway, the ECB will be important. But we might have turned a little bit just at the moment. So have a great day today. I'm Greg McKenna. You can find me on Twitter at Gregory McKenna. You can find me at Business Insider. You can find me at AXI. And you can also find me on my own. Pardon me, what do I know? That's that sniffles from getting wet at swimming the other day. You can also find me on my own website, gregmckenna.com.au, and on my trading club Twitter handle. So have a great day today. Good luck, good punting, and watch out for China. If you get a continuation of weak PPI and an acceleration in the pace of disinflation, so a rate below 1.5 or something like that for CPI, we could be off to the races again, and not in a good way. I'll catch you later. Have a great day. Bye for now.